What's up, money lovers? Welcome back. So IBM having a strong few days here on the back of earnings. It's up almost 10%. They reported very strong Q4 earnings, which we'll go over the highlights from. So this is Arvind Krishna speaking. The CEO said we now have more than 3,800 hybrid cloud platform clients, which is up 1,000 clients from this time last year. So that's a pretty good growth rate in clients, almost 25%. IBM Consulting continues to help drive platform adoption with about 700 Red Hat engagements for the year. And you can see some of their new clients here, including Volkswagen and National Grid. We had more than 50% revenue growth this year in partnerships with AWS, Azure, and Salesforce. This adds to strong strategic partnerships we have with others such as SAP, Oracle, and Adobe. So this is definitely, good to see here. I mean, it doesn't have to be a winner-take-all market. People wonder how are they going to compete with AWS, with the likes of, Microsoft and Amazon with Azure and AWS. But these companies can coexist and they can work off each other, and these partnerships continue to grow. They continue to make more revenue from these partnerships. So this is definitely all good news. We're also pleased to see our client renewal rates increasing and our recurring revenue base growing. So this all helps their profitability. If the clients are staying on board, that will reduce, future acquisition costs and help them continue to grow and boost their profitability. This is an exciting dark horse field here. In quantum, we unveiled Eagle, a 127 qubit quantum processor. This is the first quantum chip that breaks the 100 qubit barrier and represents a key milestone on our path toward building a 1000 qubit processor in 2023. Quantum computing, I think, is their dark horse. That is an industry that's been around for a while, but hasn't yet found its application or how they can make money off of it yet. But, a lot of the big companies are doing these quantum computers, and IBM could definitely be a leader in that field. If that were to take off, this could be a huge revenue driver for them. It's definitely something that you have to wait to play out, maybe another 5 or 10 years. And it's uncertain the future of quantum computing, but there definitely is potential there. While organic innovations are important, we continue to acquire companies that complement and strengthen our portfolio. We made 5 acquisitions this quarter and a total of 15 acquisitions in 2021. And they were able to do this all while decreasing their debt. We'll get to their financials in a minute. And then Krishna turned it over to Jim Kavanaugh, the CFO. We're increasing investments in R&D to deliver innovation, AI, hybrid cloud, and emerging areas like quantum. We're ramping investment in our ecosystem, and we acquired 15 companies in 2021 to provide skills and technologies aligned to our strategy, including capabilities to help win client architecture decisions. So this is all good news here. It seems that these are good acquisitions, helping IBM offer more services and grow their revenue. And as I said, so they invested over $3 billion in these acquisitions while continuing to delever, with debt down nearly $10 billion for the year and over $21 billion since closing the Red Hat acquisition. So they're paying down debt. The balance sheet is looking healthier every day. And this is in addition to returning $6 billion to shareholders in the form of dividends. So, IBM has a great dividend yield of almost 5%. It's interesting that, there was a lot of talk that they were going to cut the dividend after the Kyndryl spinoff, but they haven't yet. We'll have to see what happens there. But for now, another bonus for IBM is that huge dividend yield of almost 5%. And lastly, before we get to the financials, bottom line, we're exiting 2021 a different company. IBM has really undertaken a drastic overhaul in the last couple of years. We're finally starting to see the benefits. We have a higher growth, higher value business mix with over 70% of our revenue in software and services, and a significant recurring revenue base dominated by software. So this is great to see too. Software obviously is going to have much higher profit margins, and a lot of it is starting to be recurring revenue. This will result in an improving revenue growth profile, higher operating margins, strong and growing free cash flow, and lower capital intensity, leading to a higher return on invested capital business. We also continue to have attractive shareholder returns through dividends. And they expect to continue to grow revenue at a mid-single digit rate, which I was hoping it would, reach the low double digits maybe at least by now. But, big company, it takes a long time to turn it around. And this definitely beats declining revenue, which is what IBM had previously faced over the past few years. So definitely turning the ship around, and at least they are growing again, and they're shooting for mid-single digit growth. So some financial highlights for Q4 2021. Revenue of $16.7 billion, $3.5 billion pre-tax operating income. They achieved 9% revenue growth. However, 3.5 points of that was from incremental sales to Kyndryl. So probably a one-time thing, and we'll see them get back to around that mid-single digit, maybe 5-6% revenue growth moving forward. That's what they're projecting. Greater than 70% of their revenue from software and consulting. Their hybrid cloud revenue in the trailing 12 months was $20 billion, and that's up 19% year over year. So that's where a lot of the strong growth is going to come from, hybrid cloud. And they ended with $7.6 billion of cash on hand with a $10 billion debt reduction over the past 12 months. For 2022, projecting mid-single digit revenue growth and free cash flow of 10 to 10.5 billion. They reduced their debt. December 2020 it was at 61 billion, and by the end of 2021 it was down to 51 billion. So there's the 10 billion they deleveraged. So all in all, a very strong quarter. It doesn't sound like much, but when you take into account, this stock has been trending down since 2013. The business was not even stagnating, it was declining. So at least now they're back to growth, even if it is only 5 or 6%. And I keep this stock around in my portfolio because it ends up being a good hedge. I have a lot of exposure to big tech, so when those stocks are tanking, like we've seen in the last couple of weeks, the NASDAQ down quite a bit. This is one of the companies, along with things like Clorox, J&J, all my dividend players, help to hold up the portfolio and tend to be green when everything else is red. So I see it as a little hedge. You get this almost 5% dividend, and you'll get some modest growth, and maybe, there's a long shot, maybe 5 to 10 years, you see something happening with quantum computing. So let me know what you think of IBM in the comments below. Do you own shares? Why not? If you enjoyed the video, don't forget to like, subscribe, drop me a comment below. This is Vinny from the Investment Club, and I'll see you next time. Thanks for watching.